Welcome everyone to Vested Interest. This is Shane back for our first stock pick of the day video for September. Yep, we are already in the month of September. Where did 2025 go? Quickly wrapping up another year here. We're going to take a look at Union Pacific. This is a railroad company out of the industrial sector. This is also on my stocks to buy for September list. If you haven't seen that video, I will throw a link in the pinned comment down below. You can check that one out. Now, this is the vested interest stock screener that we will be going through in this video. It must meet 5 of 8 to make it onto my watch list. Now, this is a company in my portfolio, so not only is it no longer on my watch list, and only reason it's not on my watch list is because it's in my portfolio. So we'll see how it shakes out. But I do these positions from time to time that I hold just to do a back check on the position, see how it is shaking out. Is it still meeting some of the initial criteria in the screener? If not, maybe I need to do a deeper dive into the financials, look at their balance sheet, their income statement, see what's going on with the company, and see if they are meeting the other criteria that I set for a company. After it meets my screener, I have additional criteria where I do look at their balance sheet, their income statement, debt to equity ratios. Are their margins expanding? Is their revenue growing? What is their price to book, their price to sales? And compare them to other companies. For this one, you'd want to compare Union Pacific to other railroads. But so from time to time, I do videos of positions in my portfolio just as a back check to see where they are at and see if I need to do a deeper dive into the companies. That's what we're going to do today. All right, back to Union Pacific. You can check them out on their homepage, www.up.com. That's www.up.com. That is the homepage where I pull this information from. President Abraham Lincoln signs the Pacific Railway Act of 1862, which creates and names Union Pacific. So that's when they started, way back in 1862, really started by Abraham Lincoln. The act directs Union Pacific and Central Pacific to construct the nation's first transcontinental railroad. In 1863, depicted in this image, Lincoln designated mile 0 of the Union Pacific Railroad just a few miles. So you can see their coverage. Here's the red down below, right? There's the little in the corner there that tells you what you're looking at. But basically, it's all of the railways that Union Pacific operates or has rights to on the map here. Now, the reason we're taking a look at them, down 0.77% on the day. Not only are they down, but they are a position I own, so it's really just a back check, and plus they are on my stocks to buy list in September, so I probably should have done this before I put that video out, but we're going to do it nonetheless. We are talking about Union Pacific Corporation, ticker UNP. This is out of the industrial sector. This is a railroad company. They own and operate the railroad that ships our products around the United States. 52-week range as low as $204.66, as high as $258.07. They are closer to their 52-week low than their 52-week high, and under $235 and some change. So they are within 15% of that 52-week low as well. A market cap of $131.566 billion, a beta of 1.05. So this one is slightly more volatile than the overall market, one being the market. Price to earnings ratio, PE ratio at $19.29 per share. EPS, earnings per share, at $11.51 per share. Earnings date coming up in October, so October 23rd. Forward dividend is $5.52. They are a quarterly payer, so divide by 4 or just wait till later in the video. We're going to take a look at that. Current dividend yield, 2.47% if you were to buy them now. Ex-dividend date, August 29th. We are past that date. Looks like they are going to pay on September 30th towards the end of this month. Yes, we are in September. 1-year target estimate, at least according to Yahoo Finance, $256.92. So they don't see it quite getting back to its 52-week high, but pretty close. But a couple dollars off there from their 52-week high, a little over $1 off their 52-week high there. Now, jumping over to dividend yield theory to see if this one is potentially undervalued, I'd like to look at this as just a initial check. Again, it's not the end-all be-all. It is not a discounted cash flow analysis or in some of the other ways you can value a company. But this is one metric that I do look at on the initial screener. And to look at dividend yield theory, you look at their 5-year dividend yield average, 2.16%. You compare it to the current, 2.47%. Over here, forward annual dividend, same number, 2.47%. Since their current dividend is higher than their 5-year average, that speaks to undervaluation. So these numbers are inversely correlated. That just means higher, undervalued, lower, overvalued, right? Inversely correlated. Payout ratio, I like 75% or lower. They're at 47 or 46.57%. If you round it up, I guess it'd be 47%. So well below the number I'm looking for there at 75. I want growing free cash flow over time. Companies can do some things with free cash flow. They can pay down debt, make acquisitions. In this case, maybe another railroad. That's what a lot of these companies do, especially these large built-out railroads. There's not a bunch of companies coming in to build new railroads or railways. The bigger companies buy out the smaller companies and consolidate over time. That's typically what happens here. So they can do those acquisitions. They can pay a dividend, which this company does, pay down debt, or raise that dividend, and we want companies to be able to do that as well as repurchase shares. So going back in time here, December 2021, $6 billion in free cash flow. 2022 looks like down to $5.7 billion. 2023 down again to $4.7 billion. 2024 looks like we're back up to 5.8. Trailing 12 months 6.2. But keep in mind, part of the trailing 12 months is a few months in 2024 as well. Repurchase of capital shares, $7.2 billion in 2021, $6.2 in 2022, $705 million in 2023. So definitely decreasing free cash flow there for those first few years. But then turned it around in 2024, $1.5 billion, and then looks like trailing 12 months, $4 billion. So again, keep in mind some of that is 2024 numbers, but definitely looks like they are maintaining that repurchase of shares and increasing that again in 2025, which is good to see. Jumping over to stockanalysis.com, this is another source I go to for information, just like Yahoo Finance. There's a couple other ones out there. I do recommend more than one source so you can make sure the information you are looking at is accurate and up to date. It is a way to have a back check against information. Sometimes it's not updated, sometimes it's just wrong. It does happen. So I recommend 2, if not 3 sources, again, so you can back check and make sure what you're looking at is accurate. Now they have 23 analysts here over at stockanalysis.com that cover this Union Pacific. They call it a consensus buy, low estimate of $200, which would represent a 9.96% decrease from where it currently sits. Average estimate of $255.91, not too far off of what we saw with Yahoo Finance on the previous page. That would represent a potential 15.21% increase. And if it happened to hit their high of $286, that would be a new 52-week high, and that would represent a potential 28.76% increase. And you could lock in that plus 2% dividend yield if you were to buy them now. Now, looking at some of the statistics, I like to look at return on capital employed. I like 10% or better here. They're sitting at 15.99%. Above the 10% I'm looking for there. I like to look at earnings per share growth as well. I like 5% or better forecasted over the next 5 years. They're sitting at 9.44%. So beats the 5% I'm looking at there. Revenue is more of a deep dive number, but it's right there at EPS, so I snip it anyway. But the revenue is forecasted at 7.33%. So very good numbers overall in this one. Now, again, I do own Union Pacific. I am long this company, and I am buying in September. I'd love them to drop closer to that $200 range that we saw for their 52-week low, as well as the projection we saw on stockanalysis.com. But right now, they're about $221.94. I do hold 61.47827 shares. My cost basis is $209.19. I am up slightly, 6.09%, but again, I wouldn't mind it pulling back while I'm trying to build this one out back to this $200 range. And that D just means that they have a dividend coming up right there. This is snipped from my brokerage account there. So this is my position as of today, September 2nd, 61.4782 shares. And again, this is one I'm looking to add to in the month of September, so I would not mind more of a pullback here. Quarterly pay, as we mentioned, payout ratio 46.92%. Again, under 50%, well below the 75% I'm looking for. Dividend growth is not the greatest, 3.05%, but that about matches typical inflation from year over year, 3.05%. Growth of 18 years, buyback yield is positive at 1.22%. That means they are pulling more shares out of the market than they are issuing. We want to see a positive buyback yield. Shareholder yield positive as well at 3.72%. They do pay out like most companies do on the March, June, September, December timeframe. Going back in time here, February 2023, they paid $1.30. Looks like February 2028, they actually maintained that $1.30. Raise was August 2024 up to $1.34. And most recent raise, August 29, 2025, $1.38. So about 3% dividend growth, a little over, tick over that. Not the fastest dividend growth, but they are growing it with a relatively low payout ratio. All right, let's run them through the screen here. Understand the business. Again, they are a railroad company. They are shipping. They own the railroad, so they have to maintain that. There's some capital expenditures there, but they are shipping our goods around the country. That is really what they are doing. Growing free cash flow, no. We actually had several down years followed by looks like a turnaround in 2024. Growing dividend, yes, it is growing now only around 3%. So keep that in mind. If you're looking for something that's growing relatively fast, this might not be one for you. Dividend payout ratio is under 75%. It's actually under 50%. Dividend yield theory says they're potentially undervalued right now. It is within 15% of a 52-week low. Again, $235 and some change or lower is within 15% of a 52-week low. Return on capital employed was at 15.99%. So that's above the 10% I'm looking for. Check there. And earnings per share growth was about 9%. And I'm looking for over 5. So check there. So we're looking at 7 out of 8 here. Again, the only thing they don't get is the growing free cash flow. Not really concerned with that. That's part of the reason that I'm looking to add to this one. Let me know what you think of Union Pacific in the comment section down below. And again, I will snip and add to the pinned comment down there my 3 stocks and 1 ETF I'm going to be adding to the portfolio in the month of September. So look for that video if you haven't checked that one out. All right, that's really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments down below, and I always appreciate the questions, opinions, or suggestions for future topics. So if you have a company like Union Pacific, and I've got a couple on the list here that I'll run through this week on a day they pull back as well, so appreciate those suggestions. But if you have a suggestion like Union Pacific, that company that pays dividends, drop it in the comment section. I'll work it into the rotation, and let me know what you think of Union Pacific. Are you buying? Are you selling? Are you waiting for more of a pullback? We'd love to hear from you in the comment section down below. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Sorry, click that a little soon. We'll see you in the next one. Thanks for stopping by, guys, and hope you have a great week. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. To never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Always seek the advice and counsel of a certified financial advisor.